Welcome to the Daily Market Recap. Today is Friday, July 24th, 2026. What a wild session on Wall Street. Markets fought hard today to regain their footing after yesterday's tech beatdown, ending in a mixed and hesitant stance. The major force pulling traders in opposite directions was a direct clash between surprisingly hot economic data and persistent fears over big tech AI capital expenditure. On one hand, fresh purchasing managers' index numbers and housing statistics showed the U.S. economy is still running strong, which initially gave stocks a lift. But on the other hand, the lingering hangover from massive spending announcements from tech heavyweights like Tesla and Alphabet kept a tight lid on growth stocks. When mega-cap tech giants announce eye-watering capital budgets without immediate profit clarity, traders get nervous real fast, leaving the broader indexes struggling for direction by the closing bell. Taking a spin across the sector chart, defensive and value-oriented sectors stepped up to take the spotlight today. Energy led the pack, getting a solid tailwind as crude oil prices attempted to stabilize after recent geopolitical swings, while utilities and consumer staples attracted classic safe haven capital. On the flip side, information technology and communication services lagged behind as chip makers and growth-oriented software names faced continued profit-taking. Financials held relatively flat, caught right in the middle between elevated treasury yields and general market hesitation. Checking in on overall market sentiment, the Fear Greed Index currently sits at 39, placing market mood firmly in the fear zone. Investors have clearly pumped the brakes on the aggressive buying we saw earlier this month, choosing risk management over chasing highs. Our top headline today is the massive shift in how Wall Street is treating artificial intelligence spending. For the past year, almost any company mentioning heavy AI investment got an automatic stock rally, but the honeymoon period is officially over. Following eye-watering capital expenditure projections from tech titans, investors are suddenly asking a crucial question: when does all this spending actually transform into net profits? Software and semiconductor stocks faced another wave of pressure today as analysts trimmed price targets, proving that Wall Street is no longer offering big tech a blank check without clear, near-term returns on investment. Coming in at number 2, geopolitical headlines continue to keep the energy sector on high alert. Tensions near the Strait of Hormuz remained elevated following drone and missile attacks targeting commercial tankers in the Red Sea. While crude oil futures pulled back slightly today after a multi-day rally, Brent and WTI remain on pace for one of their strongest monthly gains of the year. Traders are watching energy costs very closely because any sustained jump in oil threatens to reignite broad economic inflation, directly complicating the Fed's rate path. Rounding out our top 3 stories, fresh economic reports dropped today and proved the U.S. economy isn't slowing down without a fight. The S&P Global Composite PMI accelerated to 53.6, beating forecasts and signaling solid expansion across manufacturing and services. Meanwhile, new home sales topped expectations at 628,000 units. While strong economic health sounds like great news, in this high-inflation market, it's a double-edged sword. A resilient economy gives the Federal Reserve zero reason to rush into interest rate cuts, keeping 10-year Treasury yields hovering near 4.65% and keeping borrowing costs elevated across the economy. All right, let's dive into the individual stock action and separate today's market heroes from the zeros. First up, let me highlight today's standout top gainers. RingCentral led the charge, surging on impressive enterprise subscription expansions and strong margin forecasts. Forum Energy Technologies rallied sharply as energy services demand remained robust. Enterprise software giant SAP continued its impressive cloud momentum, showing that established enterprise software powerhouses can generate real revenue from AI integration. And rounding out the green team, Monday.com rocketed higher after stellar user growth and upbeat guidance gave growth investors plenty to cheer about. Now for the painful side of the scoreboard, today's top losers. Bloom Energy got zapped as clean energy names faced selling pressure amid high interest rate worries. Telehealth company Hims Hers took a steep tumble as competitive pricing fears and analyst downgrades slammed the stock. AI cloud infrastructure play CoreWeave suffered a sharp pullback as investors took profits off the table amidst broader tech skepticism. And memory provider SanDisk slipped lower alongside the broader semiconductor sector as traders worried about near-term hardware demand cycles. Let's pull up the charts and examine key technical levels, starting with the SPY. The S&P 500 ETF is currently testing critical short-term support near the 735 level. If sellers push SPY below 735, the next major demand zone sits right around 730. On the upside, bulls need to reclaim resistance at 742 to regain momentum and target a pushback towards 745. Moving over to the tech-heavy QQQ, the chart shows a classic consolidation phase following recent volatility. QQQ is holding on to immediate support at the 680 line. A breakdown below 680 opens up downside risk towards 675. To spark a convincing trend reversal, buyers need to step in with conviction and clear heavy resistance at 688. Finally, small cap tracker IWM continues to display surprisingly resilient price action relative to its mega cap tech peers. IWM is holding firm above support at 288 as long as small caps stay above 290. A breakout test of major resistance at 295 remains well within reach in upcoming sessions. Turning our attention to the crypto market, Bitcoin is currently trading near the $65,000 mark after undergoing a mild pullback. BTC is holding immediate support at $64,000. If buyers defend this level, we could see another retest of overhead resistance at $67,500. However, a breakdown below $64,000 could trigger a retest of $62,000. Ethereum saw slightly more selling pressure, hovering around $1,870. ETH is currently testing support at $1,850. If bulls manage to defend this floor, a rebound toward resistance at $980 is on the cards. Losing $1,850, however, opens the door for a drop toward $1,780. Across the broader altcoin landscape, total crypto market capitalization sits near $2.3 trillion. While major assets like Bitcoin and Ethereum are taking a breath, select decentralized finance protocols showed strong, localized momentum, jumping nearly 10% on the day. Overall, altcoin sentiment remains cautious as traders await a decisive breakout move from Bitcoin. To wrap up today's breakdown, market sentiment remains cautious, highly selective, and driven by headline news, looking ahead to the next trading session. Keep a close watch on durable goods orders data alongside upcoming quarterly earnings reports, which will serve as key catalysts. That's a wrap for today's recap. If you enjoyed this update, please smash that like button, subscribe to the channel, and hit the bell notification so you never miss a daily market breakdown.